Been a little bit since old Snip talked about some, like, officially talked about precious metals, like an actual video on just precious metals. Why? Because there ain't been nothing important to talk about. But this is interesting, so maybe now it's time to talk about it. Another Zero Hedge article, hundreds of billions in gold and cash are quietly disappearing. Something strange is going on. At the same time that central banks are injecting, they've got $100 billion in each month in electronic money to crush the volatility and ramp markets. A similar amount in hard physical currency and precious metals is literally disappearing. Well, hold on. They're injecting 100 billion. You got a link to it. Yeah. What about the repos? That ain't no 100 billion a month. We're doing 100 billion a day with the repo nonsense. So is that money also going towards gold? The banks loading the boat with some precious metals because they know it's about to go down. Take gold. As we reported last week, it was none other than Goldman Sachs, which recently laid out the case for gold, saying gold's strategic case is still strong. One reason for this is that the same central banks that are full tilt printing cash, they have also been splurging on gold, and as a result of geopolitical uncertainty, there has been a record surge in gold demand by central banks themselves. Why? Ron Paul, Mr. Bernanke, Fed Chair Bernanke, is gold money? No. Why do central banks store it as in their reserves? It's not. It's just tradition. Just tradition. Do you remember that? I will never forget that because that was so absurd. And Ron Paul knew it and he busted his bizzalls. As Goldman notes, CBs globally have been buying gold, central banks, buying gold at a very strong pace. And 2019 looks to be a record year for central bank gold purchases, with our target of 750 tons combined purchases likely to be met. And just looking at the chart, from January of 2018 to January of 2019 is quite large, 2019. But it was another, even more bizarre discovery by Goldman that caught our eye. According to the bank, there has been a whopping 1,200 tons, or $57 billion worth, of unexplained gold flows in just the past 3 years. As Goldman's Mikhail Sprogis writes, rising political risk, together with negative European rates, may be an important reason behind the large share of unaccounted gold investment over the past several years. Exhibit 17 shows cumulative unexplained gold demand based on World Gold Council post-2010 and GFMS pre-2010 balances data. It surged since 2016. Similar dynamics can be seen when we look at implied vaulted gold stocks built in the UK and Switzerland, which is calculating as implied cumulative total net imports minus transport ETF gold stocks, they said. Now, I'm going to tell you, I had sent myself a video to do, but just look, because I thought I might have just deleted it, like, I don't know if I'm going to do that video. Oh, no, I did. Here it is. I got it. I saved it. Here it is. Top Slovak party leader wants the country to bring its gold home. Oh, why? Isn't it safe? Isn't it safe over in the U.S. vaults and the U.K. vaults, London, right? A top Slovak political party official said his country should bring its gold home because even its allies cannot be trusted with it. Ex-Premier Robert Fico chairs the biggest party in Slovakia. Last week, he called for a special parliamentary session on the country's gold. Why? Because he loves gold. He said you can hardly trust even your closest allies after the Munich Agreement, referring to the 1938 pact that allowed Hitler to annex parts of Czechoslovakia. So that I was going to do a video just on that separately, but I'm talking about gold now. I'll just include it right there. That was it. That's all I want to tell you. Another country, remember there was a little wave of countries. We had Venezuela do it. We saw what happened to Hugo Chavez when he asked for his gold back. He was shortly found with a fast-moving cancer and died. And then shortly after that, the country was having financial problems, and they had to sell the gold right back to the people that essentially were storing it for them, but they needed the money, so they gave it right back to them. Isn't that amazing? Remember what Lindsey Williams said, the elite. Gold is our money. That paper stuff's for the plebs, for the sheeple. Gold is our money. You ever wonder why you don't get taxed on gold? Because that's our money. We don't tax ourselves on money. Oh yeah, he's right. Yeah, he's right. When in Rome, do as the Romans do. When aware of what the elite do what the elite do. Precious metals. Like I said, I could not pull myself together to sell any of my silver to, Litecoin's under $100. I should grab some. It's 40-some dollars these days. And I still cannot come to can come to this conclusion of, maybe I'll just take a little, I've got more silver than I initially wanted. Let me just sell some of that. It ain't going to hurt. Litecoin's cheap, man, and so the other cryptos. I'll spread it. Nope. Something inside of me is saying, don't do it. Just let it sit there. It's fine. Just leave it alone. Let it be. Let it be. Let it be. Let your silver be. Just let it be. I'm trying to preach to myself words of wisdom. Let it be. When I find some cheap crypto, Steven Crypto Karaoke sings to me. Tells me don't touch your silver. Let it be. All right, I'll leave it alone. Continuing on. In other words, Goldman points out that just over the past 3 years, there have been tens of billions in gold flows, which have, and we're not talking paper contracts apparently, which have mysteriously and inexplicably disappeared from the official record, yet which are most certainly taking place behind the scenes as the world's top 1% brace for a market shock. Hold on. Who's to say they're doing this because they think the stock market's going to go down? They may want gold because they know it's not the stock markets that they have to worry about. It's the freaking dollars and the debt that all these countries have. And that's why they want their gold. It's time to get some gold because that's going to go up. Again, they know things before you and I ever know. And if they've been buying heavily since 2016, and we're just now finding out, there's just all this missing numbers that someone's been buying a bunch of gold. Oh, where's this coming from? Oh, it's the elite. Oh, that's funny. I probably won't buy any, if I didn't have any precious metals, I don't think I'd buy any. I'd just leave that alone, Those 1%ers, No. When in Rome, do as the Romans do, okay? But it's not just gold that is disappearing, according to the Wall Street Journal. So is the world's cold hard cash. Some Australians are burying it. The Swiss might be hiding it, and the Germans are probably hoarding. Indeed, while banks are printing more banknotes than ever, and these seem to be disappearing off the face of the earth, and nobody knows where or why, or as the Wall Street Journal notes, central banks do not know where they have gone, or why, and are playing detective trying to crack the same mystery. I bet they are. I bet they're real concerned. We do know one thing. Of the $1.7 trillion in US dollars in circulation in 2018, which is up from $1.2 trillion 5 years prior, the vast majority is offshore, where it is quickly and quietly disappearing as the world's second best physical store of value after gold, of course. A Fed economist, Ruth Judson, wrote in 2017 that about 60% of the U.S. currency and about 75% of $100 bills had left the country by the end of 2016 for a total of about $900 billion in U.S. dollars kept overseas. Excuse me, raise my hand. Excuse me, it's me again. Oh, here we go with that Snip guy. He's going to call us out. Yeah, go ahead, Snip. We gave Ukraine $5.3 billion. We gave Iran some number of billions, cold hard cash. We even flew it over there. Do you think that might possibly be part of the reason there's so much dollars outside the country? Not just because they want a dollar because it's so strong, but because so much effing fraud and corruption was taking place with these Democrats in charge that a lot of it's outside our border now. Try to throw that in there. That's just me talking here. Socking those bills away provides some protection against economic turmoil, especially in countries with a record of instability in their own financial systems, the paper said. I'll give you one of those questions. One of those countries. Argentina. Don't cry for me, Argentina. I've talked about this many times over the years because I found an interesting blog called Fairfal, Ferfal. wonder if I could find that. Fair space fall blog. I'm going to see if it still exists. Yes, fairfall.blogspot.com. In the last post he made, looks like December 13th, 2019, he's got a post here. Okay. This guy, it was a fascinating story, and that's why I just don't ever forget it. I remember his name or what he called himself and all that stuff, because he lives, or at the time, maybe he still does, in Argentina, and around the year 2000, 2001, I think it was 2001, their dollar was pretty much 1-to-1 with ours. One of their dollars, one of our dollars. And overnight, the people went to bed and woke up, and it was 3-to-1. Their devalued currency took 3 of their dollars for now one of ours. But some of those Argentine people said, we were expecting this. Haha, I'm so effing smart. I have 2 bank accounts, one with US dollars in it, one with Argentine pesos. Give me my money. I won. You lost. Government decree, anybody holding US dollars in any bank accounts to the banks, you will give them an equal amount of Argentine pesos, and we, the government, will take those US dollars in exchange. Again, that's fine. Give me my 3-to-1. No. You don't understand. You don't get 3-to-1. You still get 1-to-1. Government decree. Sorry. Bye-bye now. Thanks. That happened in Argentina. I don't know if anywhere else that has happened. However, if you're in another country, again, I think I will hoard those dollars for the same reasons the Argentine people did. The only question is, are those countries going to do the same thing Argentina did? And since 2001, Argentina has had, I think, 2 dollar collapses. In 20 years, another 2, at least 2, maybe 3. Imagine having to deal with that. And imagine owning gold in Argentina, because that's another thing this guy talks about. People were selling wedding rings, jewelry, whatever they could get their hands on for the gold. Because gold, it was a black market. He had mentioned that too in his blog post. This is like one of his first posts. And he talked about this black market where you'd kind of go down to the end of this area, the street, and there'd be people set up. You could barter and trade. And if you had jewelry, you fetched a good price because it had the gold and silver content, mainly gold. Not that it mattered, but again, most people have gold jewelry, not silver. And he had said, yeah, you got your fair share of that, because gold in Argentina, I want to say, went up even higher than normal prices there too because of this. So whatever the gold price was that day, I think he said it was even higher than normal. So people could barter for things, gold, whatever. The government couldn't come and confiscate that and say, oh, we'll give you Argentine pesos at the deflated rate. Nope. Which is another reason why having gold or some external asset that can maintain its value or even go up is critical. The question is, well, what is that asset? Precious metals have always been there, and once again proved very good, and in his case. But we also have Bitcoin now. However, we got all these stable coins, $1 stable coins, all priced in $1. Right, so if our dollar has a problem, does that mean the stable coins go along with it? If our dollar gets devalued 40%, the stable coins are still $1. What happens? So that's but I didn't go to Bitcoin or crypto to try to escape from dollar, that's not why I did that. I saw an investment opportunity of a lifetime that I still think is going to pay off massively at some point, not too far out. And that's why I did it. I also like the technology, and I see the world moving to that, so that's a bonus. But I didn't go there strictly right off the bat for the technology. No. I saw those dollar signs, and I said, well, the train's coming by. There it goes. Do I want to jump on that train or just sit back here and just talk about it and then later on talk about it? No. I think I'm going to go ahead and go for a ride. And I did. Okay. Anyways, that's about it for this article. Well, hold on. No, maybe not. There's some interesting stuff here. Let's continue. Well, get that out of my face. No ads, Zero Hedge. Get the ads in my face, bro. And another remarkable observation, rather, one can see this. I'm just looking. No, down here. Something about Australia. Physical cash is also popular with preppers and collectors who worry about a future collapse of the financial system, but these two groups are far too small to explain the wholesale loss of cash as central bankers scramble to follow the money and glean how society's saving and spending patterns change in a time of zero and negative interest rates. As the Wall Street Journal notes, bankers aren't just hunting down cash to satisfy their own curiosity. If central banks don't know how much cash is out there, they could print too much currency and risk inflation. Well, hold on. We know how much damn money's out there. You know how much the Federal Reserve is printing. Oh, we got $4.5 trillion on our balance sheet. That still counts. Then there are bizarre incidents such as these. Construction workers recently dug up an estimated $140,000 buried in packages at a site on Australia's Gold Coast, prompting a police search to find the trove's owner. In September, a court in Germany ruled on a case brought by a man who stuffed more than 500,000 euros in a faulty boiler, only to see it incinerated when a friend made a fix on a cold day while he was on vacation. The man sued his friend for the value of the lost banknotes plus interest. He lost in that lawsuit. People hide their money everywhere, said Sven Bertelmann, head of Bundesbank's National Analyst Center in Mainz, Germany. Sometimes banknotes are buried in the garden where they start decomposing, or hidden in attics where they are used by mice for building nests. Yeah, you know what? Now you know why old Snip's out there in the damn desert looking for gold. It's not just because I like gold. It stands the test of time. You know, I remember Mel Fisher reading about them treasure hunting off the coast of Florida, you know, some documentaries and stuff, you know, and they said, you know, like they pick up the silver coins, and they're in bad, you know, they're in pretty rough shape, you know, I mean, sloshing around in the sea, you know, so that you can still tell what they are, and many of them still have the markings on them, like the crowns, you know, stamp or whatever, the cross or whatever is on there. And but they said, you know, it takes cleaning a lot. You got to clean them up and put them in the thing. And he goes, but when you find gold, it's like they just dropped it yesterday. It's just as shiny and new as it was when it fell in, you know, 400 years ago, 300 years ago, whatever. The 1715 fleet mainly is the one. So that's interesting, right? And here's another positive thing of gold. If you were in the 1960s, had a $100 bill, $150,000, and you stuffed it in your attic and hid it, you still got $150,000. Even today, whether it says 1960 or not, it's still $150,000. If you bought gold in 1960s, which again, oh, you couldn't own gold, man. How about when it was first legalized in 1972 or whatever the hell it was, and it was 30, you know, it was 35, and then all of a sudden it blew up, whatever, $100 an ounce, whatever, $200 an ounce, whatever. And today, you know, roughly $1,500 an ounce. It has only gone up. But what was the price of gold in 1960 if you happen to have had some gold back then? Again, the going rate back in those days, again, it was still pegged to $35 or whatever, but then we went off the gold standard. But I still think the price of, let me see, price of gold in 1965. How about that? 1965, it was $35.50 an ounce. By 1968, it was $43 an ounce, which is a 22% increase. Again, $150,000, 1965, 3 years later. Oh, and again, 1965 was the last year they put silver into any of the coins, such as quarters and dimes. So just 3 short years later, it was up. So anyways, and we know that stuff's rigged anyways, but as this turmoil comes in that these people are concerned about, oh, I'm hiding my dollars, you should have been hiding gold, because that's when the stuff really goes up in times like that. And apparently a lot of people are buying gold right now, a lot of the rich people. So anyways, that's about it for this video. Take care.